Hi, dear students. Today we are starting with a new area from management accounting, that is cash flow statement. Cash flow statement is prepared as per Accounting Standard 3. Cash flow statement is also known as statement of changes in financial position on cash basis, and also it is known as statement of accounting for variation in cash. In simple terms, cash flow statement means it is a statement showing changes in cash from one period to another. It shows the changes in cash between two periods, that is from one period to another. For example, if you are given with the balance sheets for 2 years, we will analyze the changes in cash between two balance sheet dates. It shows inflows and outflows of cash and their reasons. It shows what are the sources from which we have received cash, and also the uses to which these cash inflows are applied. Okay, and also what are the reasons of cash inflows and outflows. It is a tool for short-term analysis. Cash is a short-term asset, and also cash flow statement is a tool for short-term analysis. Here, cash as for cash flow statement means cash and cash equivalents. That is, cash equivalents are the near cash items. Cash equivalents means short-term marketable securities or liquid investments. That is, these are the very liquid assets which can be converted into cash immediately. That is called cash equivalents, near cash, etc. Okay, a cash flow statement is prepared based on cash basis of accounting. We know there are different bases of accounting: cash basis, accrual basis, etc. Okay, cash flow statement is prepared on cash basis. That means we will record transactions involving cash only. Okay, transactions which does not involve cash will not be considered for cash flow statements. Then let us examine the meaning, the definition of the term cash flow statement. A cash flow statement is a financial statement summarizing cash receipts and payments and net changes. Okay, cash flow statement summarize all the cash receipts. It summarizes all the cash payments and the net changes, whether there is any change in cash as compared to the opening balance of cash, closing balance of cash, etc. Okay, which shows the net changes, inflows and outflows resulting from operating, financing and investing activities of an enterprise. It shows three types of cash inflows and outflows. That is, cash flow from operating activities. Second, cash flow from financing activities. Cash flow from investing activities during a given period of time. Okay, this is the definition for cash flow statement. A cash flow statement is a financial statement summarizing cash receipts, payments and net changes resulting from operating, financing and investing activities of an enterprise during a given period of time. Okay, according to ICWI, cash flow statement is a statement setting out the flow of cash under distinct heads of sources and their utilization. It shows the flow of cash under distinct head We have already mentioned in the previous definition, distinct head means there are three heads of sources and application, which are cash flow from operating, cash flow from financing, and cash flow from investing activities. Okay, so cash flow statement setting out the flow of cash under distinct heads of sources of funds and their utilization to determine the requirements of cash during the given period. It will help us to determine the cash requirement and to prepare for its adequate provision. If we are preparing a cash flow statement, we can identify the requirements of cash during the period, and we can make adequate provisions for arranging such cash. Okay, these are the definitions. The next objectives of cash flow analysis. What are the objectives of cash flow statement? First one, to identify the reason for increase or decrease in cash balance between two balance sheet dates. We will compare the cash balance between two balance sheet dates, that is opening balance of cash and closing balance of cash. Okay, then a cash flow statement will identify the reason for increase or decrease. When we compare the opening balance and closing balance of cash, we will get increase in cash or decrease in cash. A cash flow statement analyzes the reasons for such increase or decrease. Then to assess, monitor, and control the liquid resources available in an enterprise. Okay, cash flow statement helps to assess, monitor, and control the liquid resources with the enterprise. Okay, another objective is to prevent holding and holding cost, that is excess cash balance cost. We have to maintain an optimum level of cash. If we are keeping excess cash balance, we have a cost called excess cash balance cost or holding cost. Okay, if we prepare the cash flow statement, we can prevent excess balance and we can prevent excess cash balance cost. Next one is to identify whether there is inadequate resources. We have to maintain optimum level. Inadequate, that is illiquidity in cash, it is another problem. It will involve costs. So we can identify the inadequacy of cash. Then it helps in capital budgeting decisions. Okay, we can take investment decisions by considering the cash flow statement, and also to maintain optimum cash level. We have to keep an optimum cash level. That means there should not be excess cash balance, there should not be deficit in the maintenance of cash balance. So an optimum level of cash should be kept, which is possible with the help of cash flow statements. The next area that we discuss is importance or uses of cash flow statements. Okay, first one is cash flow statement helps in short-term planning. It will help short-term financial planning. Second one, cash flow statement helps in formulation of financial policies. A company has to make different financial policies, and at the time of formulating financial policies, we have to decide the quantity of cash to be kept, and that quantity of cash to be kept can be determined with the help of cash flow statement. Another use is that cash flow statement provides a basis for cash budget. Okay, cash budget is prepared showing the receipts and payments of cash. At the same time, cash flow statement also shows the receipt of cash and payments of cash under three different headings. So, cash flow statement is a basis for preparing cash budget. Then next one is cash flow statement reveals liquidity and solvency position. It shows the liquidity with regard to cash resources, that is cash and cash equivalents. So the short-term liquidity and short-term solvency position of a firm can be identified with the help of cash flow statements. Then cash flow statement helps in efficient cash management. We have to accelerate our cash collections. We have to slow down our cash payments. We have to manage the cash effectively, which is possible with the help of cash flow statements. Cash flow statement shows the causes of change in cash position. When we compare the opening balance of cash and the closing balance of cash, we will get a difference, that is the changes in cash position. And a cash flow statement reveals what are the reasons for such changes, that is what are the sources from which we have collected cash and what are the uses to which we have applied cash. All these are identified with the help of cash flow statements. The next, it helps in control, because we are identifying all the movements of cash, so we can control cash. Then it is helpful in short-term financial decisions. These are the importance or uses of cash flow statements. Next, we are discussing one more topic, that is limitations of cash flow statements. First one, cash flow statement ignore non-cash transactions. We are considering only receipt of cash and payments of cash. So it does not consider non-cash transactions. That is one limitation. Second one is that cash flow statement is not a substitute for income statements, because an income statement will reveal our profit or loss, but cash flow statement does not reveal profit or loss because it is dealing with only cash transactions. So we can say that it is not a substitute for income statement. Cash flow statement is historical in nature. It records only transactions which have already happened. We will prepare cash flow statement based on our balance sheet, based on transactions, etc. Okay, it is prepared based on historical transactions. That is one limitation. Then cash flow statement has a limited scope, because we are dealing with only cash transactions. There may be a lot of transactions in our accounts which does not involve cash. There may be credit transactions, especially in modern world. Most of the transactions may be on credit basis, so it has a limited scope. Cash flow statement is easily influenced by managerial decisions. A manager will make changes the cash positions according to his requirements. So cash flow statement preparation, it is being influenced by the managerial decisions. Then cash flow statement does not present a true picture of liquidity position. We are showing only the liquidity position with regard to cash. So the true liquidity position by considering non-cash transactions are not a part of cash flow statement. Even if there are so many limitations, cash flow statement is an important statement prepared to analyze the short-term liquidity position of an enterprise, and it is a compulsory statement to be prepared along with the other financial statements, especially under IFRS. Okay, so you have to give more importance to cash flow statement. Okay, thank you very much.